the other day I was browsing YouTube looking at some funny videos when I came upon a video titled Living on 4K per month in Singapore, Budgeting for 2023. And it was by none other than Lisa's Adulting in Singapore. In case you do not know who she is, she's basically a Singaporean YouTuber who talks about her journey in personal finance. She doesn't show her face, but you and I can agree that she has a sweet voice. That aside, the most impressive part about her is she managed to own an HDB at 25 years old as a sole breadwinner through planning her finances carefully. That's why in this video, we will be checking out her 2023 budget and see how she's planning her finances so that we can learn from her. But also, I will share some of my tips as to how she can improve it further. Okay, let's jump right in. Most of us are familiar with the 50-30-20 budgeting rule, where we allocate 50% to needs, 30% to wants, and 20% to savings. But for Lisa, however, she broke this down a little further. She allocates 40% to necessities, 20% to savings, 20% to investments, 10% to insurance, and 10% to wants. This is so that she will be a lot more mindful how she spends when it comes to insurance and wants. So with that in mind, let's go through her budget. First up, her current pay is 4K, which is actually quite impressive, considering that just 3 years ago, her starting pay was just 3K. So that's a big jump. That's also the reason why I always tell you guys, if you want to make lots of money, it's not by investing in crypto or Tesla or whatever. It's by investing in yourself. The more knowledge you have, the more money that you will earn. But anyway, let's look at how she spends her money. I'll be going through section by section and share my thoughts along the way. First up, $100 study loan. I think $100 is better than paying back nothing. But personally, I felt that it could be a lot more. If you look at study loans now, all of them have an interest rate of anywhere between 4 to 5%. Meanwhile, the market may still jibaboom and crash further. One of the few remaining safe investments now are stuff like SSB or T-bills, which are giving 4 to 5%. So unless she is investing her money into SSB or T-bills, it's probably a good idea to quickly pay off her loans, because by doing so, it will be as though she's earning a guaranteed return of 4 to 5% now, thereby outperforming almost everything in the stock market. Next, she's not paying her house mortgage with cash because she's using her CPF money to pay. The benefit of this is you have more cash to spend, but the downside is you are borrowing your CPF OA money from yourself, which is a weird concept. But anyway, that means that in the future, when you sell your house, you have to pay back whatever interest that you would have earned. But I guess that's not a big issue for now. Next, no outstanding credit card bill. That is good. One tip that I have is go apply for gyro payments for all your credit cards. That way, all your bill payments are automated and you won't have to worry about forgetting to pay them. Because the last thing you want is to get slapped with all those super high credit card fees. Next section, utilities. Town council fee $30, phone plan $15, house Wi-Fi $42, electric $50, water and gas $50. Most of it looks okay, but let me share some tips here. You might be overpaying your Wi-Fi bill. Most people will by default use the 1 Gbps plan, but I realize if you are not using to play online games or do live streaming, the 500 Mbps plan is more than enough. If that is the case, you can check out M1's 500 Mbps plan, which is only $30 and potentially save $10 off your internet plan every month. Quick pause, here's a short message from today's sponsor, Moomoo Singapore. Right now, we are in the earnings season, and with Moomoo, you can easily keep track of your favorite company's earnings. Here's how. In the app, go to Markets, Earnings Reports, you will be able to see all the upcoming earnings dates. If you want to find out more, you can tap on the stock, financial, and under earnings, you'll be able to see a quick breakdown of the latest result, earnings call transcript, and what do other people think about the result. So, if you are interested, you can sign up using my link down below, deposit $2,700 or more, and you receive a free stock worth up to $200. Besides that, if you invest at least $100 into Mumu Cash Plus for 10 days or more, you will receive another $20 cash coupon. With that being said, let's get back to the video. Next, taxes. Lisa is planning to use the money plan to pay off her taxes. Here, you can use CardUp and Maybank Platinum Visa card to pay for it and earn around 1% cashback after all the fees. Pro tip, CardUp lets you pay your taxes via the money plan. Next up, NTUC Union. By signing up for membership, you earn higher cashbacks when shopping at FairPrice and Unity, and you will also receive some dividends every year. So, if you often shop at FairPrice, the membership would be worth it. Though, I would recommend paying for the membership with a credit card instead of Giro to earn some cashback. Parents' allowance, $150. That means she's a filial kid, yeah? Mother's insurance, $140. Here, she's using the Maybank Platinum Visa card to pay for the insurance, because that way, she will be able to earn a 3.33% cashback. But from what I know, insurance premiums tend to have a higher premium of around 3% if you are doing a monthly payment. So this sort of cancels out the 3.33% cashback. Personally, I'm doing an annual payment to my insurance so that it's cheaper. And again, you can pay with the CardUp and Maybank Platinum Visa card combo to earn around 1% cashback after all the fees. So try checking with the agent to see how much you can save by converting to an annual premium. Transport, $100, and she's using the DBS Refresh card, which gives a 10% cashback. So that's good. Joint account, $140, household spending, $100, food and groceries, $250. I have nothing to say here other than the fact that her food and groceries budget is likely to break due to the 1% GST increase, and every shop owner using the opportunity to raise their prices even more. For insurance, she has a whole life plan and pays for it via the Maybank Platinum Visa card. Two things here. I know many people would say, why buy whole life? Buy term, invest the rest. But I would say it really depends from person to person. With term, yes, you will get to save more money for investment. But with whole life, there's a guarantee that there will be a payout if ever, touch wood, there's a critical illness later in life. So there's no right or wrong here. But I will again double check with the agent how much extra that I'm paying with a money plan. If it's 3% higher, I will switch to an annual payment plan and use CardUp and Maybank Platinum Visa card to pay for it instead. Right now, she doesn't have any hospitalization and personal accident insurance, and that's really risky. I would say at least get hospitalization insurance as soon as possible, because one, hospital bills are expensive. Like just the consultation alone would be almost $100. That's not including medicine and treatments, yeah. And two, the chances of us getting admitted to hospital is actually quite high. Like if you check the hospital admission rates in 2019, someone who's between 15 and 64 years old has almost a 1% chance of getting admitted to a hospital. So get a hospitalization insurance as soon as possible, yeah. For once, she allocates $200 for monthly shopping and $130 to language class. I think this is something all of us can learn here. And that is, while we are on the journey of chasing wealth, it's important to live a little and continue upgrading ourselves, yeah. Next, here comes the interesting part. Savings. Okay, right now, she isn't contributing to an emergency fund because she has already met her emergency funds goal. Right now, she has about 20k worth of emergency funds between her and her mother. And later in the year, she will have additional money from her late father's estate, which would bring her emergency fund to 30k. Personally, I feel that she has too much emergency fund because if we look at her needs and insurance portion, she's only spending about $1,000 for a month. Even after getting hospitalization and personal accident insurance, she'll be spending at most $1,600 a month. $1,600 multiplied by 6 months is only $9,600 a year. I have two suggestions here. One, try reducing the emergency funds to at most 10k and invest the rest. You have a job and a house now, and you already have a whole life insurance protecting your backside if ever a critical illness comes. So you don't actually need to have like 30k worth of emergency funds. 2. Right now, Lisa is putting her emergency fund in Standard Chartered Jumpstart, which gives 2% interest. Yes, we all know that emergency funds need to be liquid, but I would argue that you don't have to keep 100% of your emergency funds in the bank. For me, I know that in emergencies, I can draw cash from multiple sources. In most cases, I can pay with a credit card first. Or in a worst case scenario, I can liquidate some of my investments to pay for the emergency. That's why I'm only keeping like 50% of my emergency fund in the bank, and the rest in something like SSB to earn a higher interest. So that's something to consider, yeah. Next, she has the $100 medical bill. It's for those small medical bills if she needs to see a doctor. That's alright, I guess. She is also saving $200 a month for her medium-term sinking fund. Basically, for any short-term expenses that might come out. $300 holiday fund in StashAway Simple Plus. StashAway came out with Simple Plus last year, and they are projecting a much higher 4.6 to 5% returns. So what's the catch? Why don't we just all in our money into Simple Plus then? The reason is because in order to get higher returns, it is investing in slightly riskier funds. We don't have any performance report for Simple Plus yet, but we can check Endow's higher risk cash management portfolios, which invest in similar funds. In the last few quarters, their higher risk portfolios were giving negative returns, though over the long term, they could potentially give higher returns. So I would expect this to be the same for StashAway Simple Plus, which means that if you are just parking money into StashAway Simple Plus for just a few months, there's a chance that you will end up losing money. So just be aware of that, yeah. Personally, if I were to park my money for the short term, I would prefer to park it in Singapore T-bills to earn a high 4% return without any risk of losing money. Finally, she has a medium-term savings, basically investments for 5 to 7 years, and she's putting it in StashAway General Investing Portfolio. Next, investments. She's doing dollar cost averaging into STI ETF and S&P 500 like a smart investor, unlike me. Though I have two comments here. First, STI ETF is good if you want stability and some dividends, but it has very little growth. So personally, I wouldn't invest in STI ETF unless I need stability when I become an old RPAT. Second, SRS is good for reducing taxes, but the downside of it is you can't get back your money without penalty before 63 years old. So if you are contributing to it, you need to absolutely make sure that you don't need the money before then, yeah? Finally, Lisa invests in Prue Wealth. It's basically an endowment plan. And I know many people hate endowment plans because of the long lockup periods and low returns. But I guess Lisa knows what she's doing, so I have no comment here. Finally, Lisa has a ton of subscriptions like Netflix, Spotify, Disney+. Not too sure what credit card she's using to pay, but she can check out the Standard Chartered Smart Card, which gives 6% cashback for subscriptions. Okay, here are my thoughts. Small fixes aside, I think Lisa budgeting is really impressive. Even my budgets are not that detailed. I think her budget is a really good starting point for anyone starting out and wants to manage their expenses well. I especially like the fact that she's separating out an insurance portion, because sometimes people end up overpaying for their insurance. She also has a sinking fund to make sure that she doesn't overspend for her needs, like those expensive candles. Anyway, that's all for this video. Hopefully you find it useful. Like, share and subscribe, as I'll be posting new videos every Monday, Wednesday and Friday.